Investing is a word that is very common in our daily lives. You read it in the newspapers, hear it on the news, and even in movies or TV shows. It is a word many of us associate with the rich and the successful. But what is investing? What do people mean when they say that you should invest into something? In this video, we will answer all these questions and give you a basic understanding of investing. Welcome to Investing in a Nutshell, the channel where we explain the world of investing so that you can learn and start your own journey as an investor. In order to perform any sort of investment, you need to provide value to a potential seller. In our modern society, we have a system for this, and that is called money. A $1 note is worth something because of the promise of its value. When you earn money, you can choose what to do with it. Some of it are out of your control. For instance, you have to pay taxes. But in essence, every dollar you are left with after taxes, you can either spend or save. The traditional way of saving money is to put it in a bank. In return, the bank will give you a fixed interest, meaning the bank will pay you money for letting the bank hold onto your money for you. There are, however, alternatives to putting your money in the bank or using it, and that is investing. To invest is simply to allocate money with the expectation of a positive benefit or return in the future. In other words, to invest means owning an asset or an item with the goal of generating income from the investment or appreciation of your investment. I know that might sound complicated, but let's look at the two ways you can generate money from an investment. The first way is generating income. In such an investment, you buy an asset, and then that asset will generate money in return. Let's illustrate this with a couple of examples. Jill buys a rental property for $100,000. She rents out the property for $1,000 each month. There are also costs associated with a rental property, such as insurance, maintenance, and so forth. To keep it simple, we say that the costs add up to $500 each month. From Jill's $100,000 investment, the asset generates $500 each month, a total of $6,000 per year. This gives Jill a return on investment of 6%. Return on investment means how many percent of her initial investment is generated each year. Adam buys 100 shares of Coca-Cola for $5,400. Coca-Cola is one of many companies that pays out part of their profits through dividends. Coke does this 4 times a year, once for each quarter. And for 2021, it's set at $0.42 per share. For the entire year and all the shares, this comes out to $168, which is a return on investment of 3.11%. The other way an asset can generate money is from the appreciation, which is an increase in the value of the asset over a period of time. The value of an asset at any given time is whatever the available market is willing to pay. If the value of your asset is higher than what you bought it for, then you have generated money. Let's examine the same 2 examples from before. We know that Jill had bought a rental property for $100,000 and had a $6,000 positive cash flow each year. The property itself, however, might have a different value after 1 year than when she bought it. Jill tests the market and ends up with an offer of $104,000. That means that the asset, the property, has appreciated $4,000 in value and made here a 4% return on investment, in addition to the $6,000 of rental income. For this example, Jill has made $10,000 on her $100,000 investment in 1 year, giving her a total return of investment of 10%. Adam had only a 3.11% return on investment on his Coca-Cola investment. However, during the first year, the stock price had also changed. He bought each share for $54, for a total of $5,400. But now the stock is selling for $60. That means that his stocks are worth $6,000 in addition to the $168 he has received as dividends, giving him a ROI of around 14%. It's important to remember, however, that even if the definition of investing includes expectation of generating money, and many of them do, there are no guarantees in investing. On all investments, you can lose money, especially over shorter time horizons. And for some investments, you risk losing all your money. We will cover many of the topics already mentioned, like dividends and real estate investment, in future videos. So make sure to subscribe to the channel and press the like button. It really helps out the channel and enables us to reach more people and help them start their investment journeys. There are countless different things you can buy as an investment. All you really need to call it an investment is to have an expectation that it will generate money for you. In that sense, having a child could be considered an investment if you think the child will make you a profit. But for most of us, it's a bad investment money-wise. Here is a list of the most common ways to invest and a short explanation of each of them. Stocks. Stocks is a very common investment. In simple terms, a company has a set number of shares, or pieces, if you will, that represents ownership in the company. When you invest in a stock, you buy shares in that company, giving you ownership of a piece of the company pie. If the company does well, your shares will typically increase in value and might even generate money in the form of dividends. We will cover stocks in a lot more details in future videos. Bonds. When you want to borrow money, you either ask friends and family or go to a bank and ask for a loan. When companies and countries want to borrow money, they have more options. They can issue what's known as bonds that anyone can buy. What this does in practice is that you lend the company or country your money for a fixed interest rate for a given time period. One very common bond is the U.S. Treasury's 10-year bond, where the U.S. wants to borrow money for a fixed interest rate for 10 years. The current interest rate is around 1.6%. Real estate. This might be one of the most common investments. When you buy a house, most people have an expectation that this will generate them money, and it is therefore, by definition, also an investment. Most of us live in the property we buy, but you can certainly invest in more than one property. For more information regarding real estate investing, especially in the house you live in yourself, you should watch out for our upcoming video of assets versus liabilities. Currency. There are many currencies in the world, and their value in relation to each other is changing over time. Currency investing is not very common for the average person, but there are very large institutions who specialize on currency investments. Crypto. Cryptocurrency is a fairly new form of investment. It has existed for 12 years and has only been in the media the last few years. It is technically a form of currency investment, the same way you can buy a different country's currency. But for cryptocurrencies, we see more retail investors and institutional investors. Cryptocurrencies are not backed by a central bank. Most of them are in fact only a ledger, solved technically through what's called a blockchain. The ledger contains information on every single transaction made from the very beginning and is validated using advanced mathematics and consensus. It is difficult to explain cryptocurrency in detail in such a short time, but we need to stick to the topic of this video. Items. There's so many different items you can invest into. You can buy art in the form of paintings or sculptures, wine, or even exclusive shoes or Pokemon cards. These are normally physical objects that are rare and therefore have the potential to increase in value over time. Investments in items often requires that you specialize in a certain segment and recognize the potential increase in value for the asset. Peer-to-peer lending. In summary, we have explored what people actually mean when they tell you to go invest. Investing is buying some sort of asset where you expect that it will generate money for you over time. Money can be generated from the asset itself in form of payouts or by appreciation of the value of the asset. There are many different assets that you can invest into, and if you want to learn more, you should subscribe to this channel, where we will deep dive into various subjects surrounding investments. We hope you have enjoyed this video, and if you have any question or comment, we love your feedback. We read all your comments. Have a great day, and good luck on your own investment journey.